Hello, I'm Eric Fernwood. Welcome to another Las Vegas real estate video. There are 5 reasons why real estate should be in your investment portfolio. In this video, I'm going to cover the top 10 tax advantages of real estate. Tax advantage 1, interest. Interest is often your single biggest deductible expense. And there are 2 general categories of interest you can deduct. Mortgage interest payments on loans used to acquire or improve rental property, or interest on credit cards that you use to purchase goods or services in support of the rental activity. Tax advantage 2, depreciation. Depreciation is often your second biggest deductible expense. Now, the concept behind depreciation is that everything is like a tool and it's being used up over time and becoming less valuable over its useful life, thus creating a loss. With real estate, it's usually becoming more valuable, but the IRS not only allows it, the IRS requires you to take depreciation. And even if you don't take it, they will treat the taxable event when you sell it as if you had taken depreciation, no matter whether you did or not. Note that you can only depreciate improvements, not land. Generally, I see value allocations of about 80% to buildings and 20% to land. Now, most rental property that I deal with is depreciated over 27.5 years. So the annual deduction for depreciation on, say, a $150,000 property would be $150,000 times 80% divided by 27.5 years, or about $4,364 a year. Now, this is an effective loss, and so you can actually shield income from both your rental property, and if you have more loss than you have income, you can shield other income sources as well. Tax advantage 3, repairs. The cost of repairs to rental property are deductible in the year in which they are incurred. Examples include painting, repairing floors, fixing leaks, replacing broken windows. Anything that is an item that you need to repair the property is deductible in the year in which it occurs. Now, you have to be reasonable, but there's a lot of things that can be included in this category. Tax advantage 4, travel. You can deduct your travel costs. This is one of the reasons many people who live in other states or other countries like buying real estate in Las Vegas. Because when you travel out here to, of course, check on your rental property, you get to deduct your airfare, hotel bills, meals, and other reasonable expenses. Check the IRS for specifics, but this is one way to have your vacation partially financed by the inspection of your property. Tax advantage 5, home office. Provided you meet certain minimal requirements, you may be able to deduct your home office from your taxable income. Now, that includes a portion of your house, heating, air conditioning, office equipment, computers, all sorts of things. You need to be careful, you need to keep records, and you need to read the IRS documents, but this can be a nice deduction. Tax advantage 6, independent contractors. You can deduct wages or fees for independent contractors. For example, a property manager, yard service, pest control, anything done along those lines is deductible from your taxable income. Tax advantage 7, casualty and theft losses. If your rental property is damaged or destroyed by fire or water, you may be able to deduct all or part of the losses. Tax advantage 8, insurance. You can usually deduct premiums you pay for almost any insurance for your rental activity. This includes fire, theft, flood insurance, and a landlord general liability insurance policy. Tax advantage 9, legal and professional services. You can usually deduct fees that you pay to attorneys, accountants, property management companies, real estate investment advisors, and other professionals, as long as the fees are paid for work related to your rental activity. Tax advantage 10, 1031 exchange. This is the ability to exchange one investment property for another without tax consequences. Now, this is such an important aspect of real estate that I have an entire separate video on this, so please see my website, www.ericfernwood.com/lowercase-invest, and look for the 1031 video. So what does this mean practically, all these tax advantages? Well, what I did was I took a typical investment property. You can stop the video and check all these items out. These are all pretty typical, and I plugged in some typical repairs and an example of a travel and home office and things like this. I just plugged these in so we'd have numbers. Let's compare what the cash flow numbers look like versus the taxable income numbers. Cash flow is what you're actually paying out or putting in your pocket. So here's your rent for 12 months. These are all the items you're physically paying for, and you're going to end up with approximately $2,396 in your pocket with this model. If we look at the same type of numbers, but your taxable income, there's the same rent. You have all these deductions, including depreciation, but you have a net loss of $1,334. So even though you actually have a cash out of over $2,000, you're going to be shielding $1,334 of other income. This is the advantage of real estate. That brings us to the end of why real estate tax advantages. For the other 4 advantages of real estate and much more, check out my website, www.ericfernwood.com/invest. Thanks again for your time, and I hope to see you again soon. Bye-bye.